Good afternoon, everybody. My name is Andy Chamberlain. I'm the Director of Policy at IPSE. Thank you for joining us this afternoon for this webinar. We're going to take up approximately an hour of your time, and we're going to be talking about, well, everything that's been going on with the coronavirus and the various packages of support which are available, those which are not available to certain types of self-employed people as well. And we're going to quickly cover off the IR35 issue too. Can I ask you all to just put into the questions box or the chat box whether if you can see the slides and hear us? Confirmation of that would be most reassuring for us. And while you're doing that, I'll just introduce you to my co-presenters today. I'm joined by Alistair Hutchinson, IPSE's Policy Development Manager. Alistair, are you there?
Yep. Morning, Andy.
Hi there. And Ryan Barnett, IPSE's Economic Policy Advisor. Ryan?
Hi there, I find it's the afternoon. Hello.
Hi. And I'm glad that you're all with us, and at least I can hear you. And I hope that others can hear us too. So I'm going to proceed, but do let us know if you've got any problems. We also have Jane on hand who can help with any kind of technical issues which you might be experiencing. We're all doing this, of course, from remote locations. So we're all in our individual homes doing this webinar. We did it last week and it seemed to work. So hopefully it will work again today. We will just get on with it. So we wanted to start off just quickly recapping what happened with IR35, which now seems ages ago, but was in fact only about 3 weeks ago. Steve Barclay, the Chief Secretary to the Treasury, stood up in Parliament and announced that the government was going to postpone the reforms to IR35. So, you know, what was going to happen is that in the private sector, IR35 status was going to be decided by end clients, and agencies, if there's an agency in the chain, we're going to have to tax any payments to contractors at source. IPSE was absolutely opposed to those proposals. We opposed them when they came in 2017 in the public sector. We were opposed to them now, and we were pushing for a delay. We were pushing for a complete cancellation, but we were pushing for a delay in thinking that might be our best chance of getting it. And we were doing a lot of stuff. We gave evidence to a House of Lords committee which actually called for this delay one day before this announcement was made. So we're grateful to them for sort of heeding our recommendations and pushing for that. Now, it's not a cancellation, is what the government are very keen to stress. They are postponing it, so this is still going to come in 2021. However, IPSE is going to spend the next year lobbying very, very hard on this issue. You know, we believe that this is a disastrous piece of legislation, and we are going to push the government into re-examining that policy and saying, look, this is damaging, it is catastrophic for many small businesses, and we really shouldn't do it. Now, we do welcome the delay, but we also recognise that for a lot of people it came too late. A lot of contractors were already told by their clients either they were inside of IR35 and shoved into some umbrella company arrangement, or perhaps they just decided to close their businesses, or that their clients just said, we're not going to engage with contractors at all because of IR35, because it's such a nightmare, because the whole thing about IR35, understanding it, working out when it applies and when it doesn't apply, and running the risk that you could at any time in the next 6 years be called into question by HMRC over those decisions that you've made on IR35, and then ultimately be landed with a huge tax bill. That was too much for a lot of clients. The banking sector went first, and then a lot of other big hirers followed suit. They just said, we're not going to do the IR35 decision. We're just not going to engage contractors. So it's been a horror show for contractors out there. Our hope is that the clients can come back to contractors now that IR35 has gone. Of course, there's another big problem at the moment, which we're all aware of, and so you know, there's also that's the immediate problem that we've got right now, is the coronavirus and the impact on the economy and what's going to happen, and are there going to be any businesses left to work with or for in the next few months. So that's what we're going to examine for the rest of this, but I just wanted to sort of let you know about the IR35 decision, how we think that that is good news, but we do need a functioning economy to properly enjoy this freedom from the IR35 change. And just to let you know, we are going to be lobbying on that issue very hard when we do return to some sort of normality. So I'm now going to hand over to Ryan, who's going to talk us through some of the recent government.
Firstly, the eligibility for the government scheme that was announced last Thursday. I'll then move on to how it will be delivered, sort of when and via what mechanism, and then close off with some other bits relating to the scheme. So if you go to the next slide, Andy. So firstly, in terms of eligibility, you will need to prove to the government that you are a self-employed person via being a sole trader or having a partnership, and that you have operational profits from your business below £50,000 per year, and you'll do that using your tax returns from at least 2018-19. But if you have tax returns from 2016-17 and 17-18, they will also need to be applied. That will allow you to claim up to 80% of your profits, but you will receive it'll be capped at £2,500 per month. You must also, if you have been in employment during that time as well, you must prove that you have been in majority self-employment, so 51% self-employed over that period. Moving on from that, so the scheme will be backdated to March the 1st. However, you will be contacted directly by the government, and they hope to do that by the start of June, and it will be backdated to March the 1st, covering 3 months, and you will receive a lump sum, and that will cover the 3 months. However, the government are looking at updating the scheme and or rolling out beyond that, and there may be a review beforehand. You can crucially still operate, and there are different reasons for this. The government obviously, I don't think, want to put anyone out of business, but they're also concerned that people, so if you're an old couple, for instance, and you're self-isolating and your boiler packs in, you will need someone to fix that. So you can still operate and receive money from the scheme, although of course June is quite a long time to wait. It crucially,
Ryan, just to sort of clarify on this one, so this is the big scheme that was announced last Thursday by the Chancellor. This is the SEISS, or the Self-Employment Income Support Scheme, and it is quite generous, this scheme, but it's got some very sharp edges. So for those that fall within it, it's pretty good. But for those that don't fall within it, it's no use whatsoever. And we will examine those in a few slides' time. Sorry to interrupt, Ryan. Go ahead.
That's all right. It's okay. My doorbell's going as well, rather annoyingly. So yeah, so it will cover those 3 months. Of course, it doesn't cover anyone that's become self-employed in the last year, rather disappointingly, and hopefully that will change at some point. And it doesn't cover anyone who's taken, so if you've taken a gap of any kind during that period, the main concern probably being people who have taken time off to care or look after children, maternity gaps, and maternity pay as well, that won't be part of that calculation. The wait until June is quite a long time, so there is, I think there's some worry out there that people are going to have to fill the gap beforehand to keep operating. As Andy said, it is fairly generous, but one of the big caveats being that it doesn't cover limited companies. And of course, if you earn, you've had £51,000 in profit, you won't be eligible for the scheme. But if you've had £49,000 in profit, you will be, which seems slightly unfair. Have I missed anything, Alistair or Andy?
I think that covers the main kind of criteria for the scheme. I think that the key thing is that they're going to look at your tax returns, and if you've only got one tax return for 18-19, they'll base it on that. But if you've got 2 or 3, they'll base it on an average of those. So it's the most recent one that you will have filed is 18-19. And the further point to add is that the Chancellor has given about 3 weeks from now, it was 4 weeks from when he announced it, for those that hadn't yet filed a return, who should have done for 18-19, they should have done it by the 31st of January. You've still got 3 weeks from now to file that return and then be eligible for this scheme. So that's something to be aware of.
So if you go to the next slide, we've been contacted by hundreds of you worried about the problems with the scheme. Obviously, the wait till June is a big one, and those that become newly self-employed, along with those that are limited companies, will probably be the main people contacting us. We consulted with the government on this, and when we put a proposal together, 10 days ago, a very long 10 days ago, we put a proposal together that included caveats to look at things like maternity gaps, people that have become self-employed since, and crucially, we wanted it to apply to limited companies as well. So we've been out there on the airwaves, done a lot of media, been very busy trying to answer your questions when we can, doing call-ins on radio and TV as well, trying to answer some of these questions. But we understand there's a lot of appetite out there at the moment to sort of clarify some of the grayer parts of the scheme, and we're hoping that the government will outline in more detail exactly how this is going to work, perhaps today or tomorrow. We are still slightly finding our feet in some respects because there are some grey areas, but we're trying to get back to people as much as possible. And the questions that you sent in, we're going to try and answer to a best ability during this webinar.
Okay, so I'm going to talk a little bit now about limited company directors, who there's been people have correctly identified that they are not eligible for the SEISS scheme, and they haven't been helped in the same way that the employees have either. So SEISS doesn't apply. There is this thing called the Job Retention Scheme, or the Coronavirus Job Retention Scheme, the CJRS. Now that's designed for employees. That was the thing that was announced about 2 weeks ago by the Chancellor. And the idea there is that an employer can furlough some staff, in other words, send them home and tell them not to do any work, and the government will pay the employer 80% of their wages, which they can pass down to the employee, which they must pass down to the employee. They can also top that up with the additional 20% themselves if they want to be generous and good employers to their employees. Now, the job retention scheme, we're pretty certain, does apply to limited company contractors, but only in that they are employees of their own company. But it only applies to the PAYE element of their income. And for most contractors, that's a small part of their income. The way that most limited company directors organise their affairs is they pay themselves a very small salary, usually somewhere just below the national insurance threshold, which is around about £8,500, and they then pay the rest of they get the rest of their income from drawing down dividends from their company. An entirely legitimate and perfectly normal way to organise your affairs, and what most accountants will advise you to do. The trouble is that the job retention scheme will only apply to the PAYE element and not to the dividends, which means that directors who apply for the scheme will get 80% of not very much compared to their overall income. Now, we've spoken to the government at length about this. As Ryan said, we initially said we were calling for, and some of you may have seen that we were calling for a what we were calling a mitigation fund, an emergency temporary income fund for self-employed people, and that's basically what we got. But we said that it should include limited company contractors. The problem that the government, as they say it, is that they can't distinguish between dividends which are from the company's profits and other dividends which might be, say, from share portfolios or or elsewhere, or perhaps from having shares in other companies and things like that. And they really are talking about you trying to look at your basic income. That's what they're seeking to do. And this has been, to date, a barrier which we haven't been able to hurdle. It's left directors feeling quite left out because they can't access the self-employed income support scheme, and they're sort of saying, well, if you imagine you're a limited company which has a few employees, you're sort of saying, well, hang on a minute, I can get 80% of my employees' income given to them, so they get 80%, but I don't get, what do? I get a very, very small percent of my overall income because of the dividend problem. Now, we've been having a look at this and trying to work out, is there a way that dividends can be easily distinguished? I think one of the problems for the government is that the way that the SEISS works in particular is that they're not really asking people for any information. They know what people's tax returns say. So they're just going to do the calculation and then contact those people and say, you're eligible for this grant. This is how much we're going to give you. I think that they're then going to invite them to go online and fill in a fairly brief form which says, yes, please, I'd like the grant, I'm still trading, one or two other questions, and then they will get the money. Whereas I think for limited company contractors, they would have to apply and send in some sort of paper trail or evidence that where the dividends have come from. Not impossible, but the trouble then is that someone from HMRC would have to manually check through it, I think. I mean, there might be some simpler way to do it, but I haven't managed to think of it yet. There's also a bit of a concern that we have around IR35 on this one, because you may have noticed that when the Chancellor announced the SEISS scheme, the scheme for sole traders last week, in the same breath as announcing it, he said, now, we're being very generous to you here, so we're also going to look at your, basically your tax rate or their national insurance rate. Sole traders pay class 4 national insurance at 9%. And the government is going to try to increase that to, in its view, make it more equitable with employees, because it's saying, look, we're giving you this generous package just like we're doing for employees. So you know, we're going to look at your tax rates. We intend, as I said at the start of this webinar, to spend the next year lobbying very hard on IR35, and I think that our arguments would be undermined, certainly in the minds of the government, not necessarily in ours, if dividends were included in something like the job retention scheme, even if you could get over the kind of practical hurdles which have been sort of put there around how do we distinguish what sort of dividends we're talking about here. So we're also thinking about, is there some other fiscal measure which could be put in place which would target limited company directors directly, if you excuse the double director? So what we're saying is maybe it's the case that they don't fit easily into the job retention scheme or the self-employed income support scheme, but maybe there's something else that could be done for them. And it would apply to all limited company directors, not just to what we might call a limited company contractor, or what the government sometimes unhelpfully refer to as a personal service company, but also to anyone who's running their own company and, you know, has employees and perhaps has a business premises and all those other sorts of things which often don't apply but sometimes do to limited company contractors. So we're thinking, could there be some sort of tax break that could be promised, which could be delivered either through the corporation tax system or even through raising the personal allowance for limited company contractors? That would enable them to take money which they've currently set aside for tax from the last tax year, which they would have to pay by next January. They would allow them to access that safe in the knowledge that they're not going to be asked for as much of that or all of that as they had anticipated previously. The other thing that's somewhat interesting in this space is that there is this public sector guidance which the Cabinet Office have issued to all public sector hirers, in which they appear to say to public sector hirers, look, if you've got what they call a personal service company that you're paying, you should actually effectively furlough them and put them on 80% of pay if they can't work from home and if they can't come into the office to do work. Which sort of sets a bit of a benchmark there. So the government is saying, on the one hand, that when we're talking about our employees or our contractors, we can treat them in the same way, but we're not going to issue that guidance to the private sector. Now, I think that that would be problematic. Plus, I've got my concerns about IR35. But that's interesting that that is out there. And it made me kind of think that the public sector guidance there doesn't try to distinguish about whether that inside that personal service company, someone is paying themselves salary or dividends. It just says we would normally pay gross that personal service company X amount. Let's give them 80% of that. And therefore, I was thinking perhaps what we need is some sort of more generous package of support for businesses generally. Now, Alistair shortly will be talking us through what packages of support are available out there. But what they haven't really had, business in general, is that sort of cash injection. I mean, yes, you can pay your employees, but they're not giving cash to the businesses. And maybe they should do. And if they did, then limited company contractors could also access that. So I'm sort of beginning to think a bit like that on it, but we are still, and we are talking to the Treasury about all these things. So we haven't given up on, my point on this is that we haven't given up on limited company contractors at all. A lot of IPSE members are limited company, right? And we know that, and they're our bread and butter, and we are here to look after you. And we know that you're feeling like you've been left out of the various schemes, and you have been left out of the various schemes that are out there. And we are thinking about ways that a package of support which is suitable, which doesn't hit the practical barriers of how you sort out what dividend income is what, and also which doesn't undermine our position as we're not employees, we're actually businesses, and can we get help as a business? That's the way we'd like this to be structured, and we're trying to think, and we are talking to the Treasury about that. Now, we're also talking to the Treasury about the SEISS scheme, which Ryan outlined earlier on, and we're saying to them, as well as thinking about what we can do about limited companies, let's have a look at those sole traders who are not within the scheme currently. One big group of them is that people who didn't file a tax return for 18-19 because they've only been trading in the current tax year. This tax year is about to end. And what we've been saying to them, to the government, is there any way that those people could promptly do a tax return for this current tax year, which ends at the weekend, and perhaps get that in by, say, the end of April, that then they could be accounted for in the scheme, and they could still receive their payment, which Ryan said, well, isn't likely to come until early June, though I think the Chancellor's going to try to bring that forward. I think he's looking to sort of under-promise and over-deliver on that one. So maybe there's a way that they can be included in that. The Treasury is very worried about fraud, and they don't mean individuals sort of, you know, toying around with their tax returns and kind of ironically doing the reverse of what the HMRC are always paranoid people are doing, which is underplaying their profits. In this case, people might overstate their profits in order to get a greater grant. But of course, then you'd be opening yourself up to paying a higher tax bill anyway. So, you know, that might not be too much of a problem. What they're worried about is serious organised crime fraud, proper organised crime organisations basically coming up with fake IDs and submitting false tax returns, basically entirely sort of fraudulent and false. That's what they're concerned about. Now, we have pointed out to them, well, they could do that anyway, because you've just given them an extra 3 weeks to file the tax return for 18-19, but they're very nervous about extending it beyond that. My hope is that they're going to do something on this one. They haven't given me any indication that they will, but it does. I think that they would acknowledge that there are lots of people who they do want to get this money to, who are excluded from it because of that deadline of the tax return. And so anyone who's just started trading in the last year, and by the way, you know, my heart goes out to any business that's been started up in the last year after working in some employed role for a long time, and someone's taken the plunge and thought, you know what, I've always dreamt of doing it, I'm going to set up a business on my own, and they've done it, and they're just about starting to get their affairs in order and maybe turning a profit, and then bang, coronavirus hits them. And I really think that we should be looking to do something for those people, rather than just saying to them, well, you can apply for universal credit. Anyway, so my hope is they will do that. And the other group is those who earn over the £50,000 cap. The problem with this cap is that now the Chancellor was at pains to point out that 95% of those people who were self-employed in the proper time period are under that cap, so it will apply to them. But the trouble is that this benefit escalates and gets more and more generous until you get to the very top of the cliff, So say you're earning 49,999, and then you plummet off and get nothing. And I think that the way that works is difficult. We did say to the Treasury when we were inputting into this, could we put a taper in? And they said it's too complicated and it will delay the rollout for everyone else. But we've since been saying to them, well, is it really that complicated? You could imagine a scheme where you'd say, look, if you've earned over 50K, you don't get 80%, you get 70%, and then if you earn over 60K, you get 60%, or whatever it might be. You catch my drift. It shouldn't be overly complicated to do that, should it? I mean, I think, to be fair to the government, all these things are complicated, right? And all of this is totally new ground. This is they've launched these huge schemes out of nowhere, and they've rustled them up basically on the back of a fag packet and got them out hastily because they've had to, because people need that reassurance. It's not easy to do this stuff, right? So I'm not going to be too critical of the government at this stage. But what I hope and what I'm saying to them right now is, look, it's fantastic that you've got this here, but of course it's not going to be perfect. Is there scope for us to sort of tweak and tinker around with it so that we can start filling in some of these gaps? The other point I'd make about the 50K cap, by the way, is that going back to the thing with limited companies, of course, if limited company directors were included in the SEISS, the Self-Employment Income Support Scheme, and their dividend income was accounted for, I think quite a lot of them and quite a lot of IPSE members would not get any benefit because of the cap. So that's another thing to be aware of when people are saying let's open this up to limited company contractors and take account of their dividends. The cap's there. It will benefit a lot of limited company contractors if they were inside it, because they don't have profits over that much, but there's a lot who do, so that's something else to consider. Okay, I think we're going to hand over to Alistair now, who's going to talk through some of the other measures that have already been announced.
Yeah, thanks, Andy. So between them, Ryan and Andy have kind of covered the two big things that the government has done in terms of the Self-Employment Income Support Scheme and also the Job Retention Scheme, which, however imperfectly, is available for limited company directors. They've announced a kind of raft of other measures, and these broadly fall into one of kind of two categories. So there's business taxation finance support, and there's making the welfare system more generous and easier to access. The welfare system is a slightly trickier one, so I'll deal with the kind of business tax and finance measures first. Andy, if you want to move to the next slide. Sorry, Andy, if you could change the slide, that'd be good. Thanks. So we've got all this information up on our website as well under the FAQ section, which has the kind of links through to the government web pages on these. So if you kind of see one of these things and you've not seen it before and you want a bit more of information on it, you can go to our website and you'll hopefully be able to kind of be redirected to the exact page on the government advice to stop you kind of Googling lots and lots and lots. So I'll quickly just run through these. The first, which you may have heard of, is the Coronavirus Business Interruption Loan Scheme. So this is intended to provide government-backed, kind of partially guaranteed financial support through accredited lenders to small businesses and self-employed people that are losing revenue, seeing their cash flow disrupted as a result of the coronavirus. The British Business Bank, which is kind of overseeing the implementation of this, says that self-employed people with an annual turnover of up to £45 million can apply under the scheme, as long as they operate through a business bank account and generate more than 50% of their turnover from trading activities. And as I say, this includes sole traders, freelancers, limited partnerships, limited companies operating in all sectors. And it's designed to kind of provide loans of up to £5 million, and this can be in different varieties, so term loans, overdrafts, invoice finance, asset finance. And the government has said it won't charge businesses for this guarantee, and it will also cover the first 12 months of interest payments for businesses. Now, you might have seen in the press in the last few days that, you know, as in the financial crisis, the government kind of makes an announcement about, you know, pressuring the banks to ensure that there's kind of money flowing to businesses, and then the banks start looking through the practicalities of this and their own balance sheets, and they start getting a bit of cold feet about lending to small businesses. The government is really pushing banks to be as generous as possible with this, but it is kind of tricky tricky area, but it is one option that you might want to look at. Small business grant funding is available as well. This is up to £10,000, and that's being kind of divvied out by local authorities. Again, this will apply kind of quite specifically to small businesses and sole traders that already pay little or no business rates because of they're in receipt of small business rate relief. But as I say, it's a kind of one-off grant of £10,000, and the eligibility criteria is basically that you are a business that occupies property and you're already in receipt of the small business rates relief. I think in terms of things that are more useful and practical, they've announced a number of measures related to tax payments. So for one is your next self-assessment tax return payment, which was due on 31st of July. That has been, you can defer that until January 2021. Now, in and of itself, at the end of the day, tax can be deferred, it still has to be paid. But I think, anecdotally, there's a lot of self-employed people who have put money aside to pay that. Those in particular who are eligible for the SEISS scheme, but are looking at a kind of 2-3 month wait to get that money in when it comes in June via the grant. In theory, this is one way potentially that you could use money that you've set aside to tide yourself through the next few months. VAT payments as well. So if you're a UK VAT registered business, and if you've got a VAT payment due between the 20th of March 2020 and 30th of June 2020, then you have the option to defer the payment until a later date. And HMRC has said it will not charge interest or penalties on any amount deferred as a result of the Chancellor's kind of announcement on this as well. And then a kind of piece alongside this is HMRC's time to pay arrangements. So they've set up a dedicated helpline for businesses and self-employed people who are concerned about paying their tax due to COVID. And as you can see there, we've jotted down the phone number to call. And this is really designed for any businesses and self-employed people in financial distress or with outstanding tax liabilities. You may be able to kind of receive support through this service. The arrangements are kind of agreed on a case-by-case basis, tailored to your individual circumstances, but they are quite wide-ranging. So this can include things like corporation tax as well. And then on the other bits and pieces, so companies can apply for a 3-month extension for filing their accounts to Companies House as well, which some businesses may find useful. And then there's a kind of series of wider support beyond kind of your core business. So you may have seen the support for those who have mortgage payments, the kind of 3-month holidays. The banks, we've got a list on IPSE's FAQ page to kind of all the major banks and building societies, coronavirus pages. We don't really have scope just now to cover kind of the actions of each individual one, so you can go to that site and have a look. But broadly speaking, the message is that in terms of what the banks and building societies are saying is that you'll be able to access savings that are in fixed terms accounts with no penalties. There won't be fees for missed payments on credit cards, loans, and there's some extra borrowing facilities as well in terms of credit limits and overdraft facilities. And that's kind of the main bulk of it. There's other bits and pieces which are floating around, but we're really looking for a bit more detail on. So one of these is the hardship fund, which was announced at the original budget back in the 11th of March, which seems like a long time ago now. That was about £500 million for local authorities to basically use for individuals and small businesses in their authority areas who are having kind of severe financial difficulties as a result of the coronavirus. There's also a few other bits and pieces. Again, there's information on the website about this. In Wales, for instance, I think they've opened up some kind of specific grants for businesses, kind of micro businesses, which is those less than sort of 10 employees as well. So there's a few different things around. As I say, we're trying to capture as much of this. And I suppose the general message on all this is in absence of a kind of all-encompassing scheme that covers self-employed people on the round, try and use all of these different levers at your disposal to kind of help you through as much as you can and plan your finances. And then, if Andy, you want to change onto the next slide, I will very quickly talk about what welfare and benefit support is kind of available as well. This is, a lot of this information we presented last week at the webinar, and there's not too much different. And I suppose the general message is it's very difficult to give a kind of all-encompassing, here's how much you will be entitled to, here's the exact route to go down, because this is all very much dependent on your personal circumstances. That's the way that it's all kind of carved out. Very quickly, so for those who, if the coronavirus, if you're affected by it and you're unable to work, or ill, or you have to self-isolate, as long as you've paid enough national insurance contributions, you might be able to claim what's called New Style Employment and Support Allowance if you're ill. One of the things they've done is they've made this payable from the first day of sickness rather than the 8th, which is what it used to be. And broadly speaking, claimants under 25 will be entitled to about £57.90 a week, and over 25s, £73 a week. But I think the big thing, and certainly one of the things we're getting a lot of questions on at IPSE and in the policy team, is on universal credit, which, if you've never heard of it, is a payment designed to really help with your living costs paid monthly. The intention behind it was that it would replace a kind of suite of pre-existing benefits, things like child tax credit, housing benefit, working tax credit, although there are still some of these kind of legacy benefits in operation. And really what the government has done here is try and level the playing field for those who are self-employed and those who are employees using this system. So previously, one of the criteria that they would look at is they'd use this thing called a minimum income floor, which would give you a kind of assumed level of income for the self-employed. And we always at IPSE thought this was quite a badly designed bit of policy. We felt it did not give an accurate reflection of the volatility of self-employed people's incomes, and ended up in perverse situations where you could earn over the floor but see your universal credit claims deducted, or you earn under it but they don't get topped up. So they've just decided to remove that completely for all self-employed people applying for the scheme. They've said originally it was just for those who had the virus or were self-isolated. They've since completely broadened that out to anyone affected economically by the virus, which is essentially everyone. And they've also increased the standard allowance by £1,000 a year. And this is really to bring it into parity with the rate equivalent for statutory sick pay. So what does this all mean? I think in broad terms, it means for a single UC claimant, age 25 and over, standard allowance is increased from about £317 a month to £409 a month. Now, we know at IPSE this is a small amount of money, particularly for people who have been seeing a lot more coming in and will have quite big outgoings in terms of rent, potentially childcare, their bills and things like that, which was part of the original impetus behind why we were pushing for some kind of further income protection for self-employed people. We just didn't think this is enough. But look, it is there. There are benefits to using it. Some of the changes that have happened recently, particularly in terms of the housing element and how that is factored in, that's changed quite a lot recently. So the overall amount that you could be claiming may end up being kind of closer to that £1,516 a month when all of your circumstances are factored in. So don't dismiss it kind of completely. It is, it's a difficult system. You'll have all seen the news as well about being able to access it in the last few days and things like that. But it is there. And then just two very final quick pieces on that. How does it interact with the self-employment income support scheme? So this is one of the areas where we're looking for a bit of kind of further clarity from government. But I mean, our understanding is that before those self-employment grants are made in June, you should still be able to access other government support, including universal credit, and that applying or claiming for UC, that should not affect the amount of the grant that you receive or your eligibility for that scheme. The only thing which we would say to be mindful of is, and again, we're seeking clarity on this, but once the grant comes in, that will be counted as earnings and factored into your universal credit claim. But as I say, broadly speaking, our best understanding at the moment is, your UC application will not change the eligibility for that grant or the amount of that grant, which is based on previous year's tax returns. And then finally, we've had a lot of questions as well as to whether, if I'm a limited company director, can I still claim universal credit? Again, the short answer is yes. As a company director, essentially, the government guidance that I've read, certainly at least, says you'll be treated effectively as self-employed. DWP will want to have the details of your income and expenditure for the business each month, and we'll take all that into account. But yes, there isn't anything in theory that stops you applying. And I think that's kind of it as a whirlwind tour of the kind of benefits on offer. And then I suppose finally, what's IPSE doing going forward, and kind of what have we been up to? As Andy said there, really, we've welcomed that government support package. We do think, as I say, for those that are captured within it, is extremely generous, but there's some real sharp edges, which mean that some people aren't included. And really what our big focus is over the next few weeks and months will be ensuring that those who are not included in that there's more support available. And so that those kind of holes in that support package are plugged, basically, so that we're not just leaving people out there. Done a kind of quick recap there of the things we've been up to. I don't need to kind of go into too much detail on that, but needless to say, as Ryan mentioned, we've been flat out answering kind of member queries on the news. We've given evidence to 2 select committees as well. We've been working really hard with a lot of other organisations who represent freelancers, contractors, self-employed people, calling for more income support, putting together a letter to the PM and a petition as well, which hopefully many of you signed and got over 200,000 signatures. So we've been really trying to just push the message that the self-employed are a vital part of the UK workforce and economy, and the government needs to respond. I would say we've got a bit of the way there in the next few weeks without kind of wanting to overpromise, because it is a challenge to get some of these things in place, but we are certainly working with government and trying to kind of push forward where we can as well. And I think that's it. Just as a quick final bit, but then we'll get into some questions. How can you stay up to date? We've got a link there. These slides and this recording will be shared up on our website, but feel free to make a note of that little link there to sign up to our newsletter, which is where we'll be kind of aiming to put out sort of weekly little updates on what we're doing. Keep checking the website, and that FAQs page is being updated all the time. It's being updated to reflect new questions, ones we hadn't even thought of as well. So that will kind of be a live site for information. And we are speaking with other kind of government departments. So where we don't know the answer to a question, we will endeavour to kind of forward it on to the relevant people in there and get it answered for you. And I think that's it. I think we should probably get some people's questions now, I think.
Thanks, Alistair. Yeah, I mean, just to reiterate that, we're planning at the moment to have a webinar every week, and we are going to hopefully get to a place where we can put into the website and list the next sort of 2 or 3 in advance so that people can see them. There's enough going on right now that I think we can come up with new content every week, because the situation is changing so fast, and we can also then go over some of the stuff that's already there for those that missed out on previous webinars. So that's what we intend to do. Now, I think we've had quite a few questions, and I've been told I can't see the questions, but I'm hoping my co-presenters will inform me of what the questions are saying. But I'm told that we've had lots of questions on the furloughing aspect of the job retention scheme. And yes, this has been causing some confusion. So if you're a limited company director, first of all, can you use the job retention scheme on the PAYE element of your income, which usually isn't very much? But the answer is we are very certain, yes, you can. We are expecting some government guidance just to make that crystal clear, but we have it on very, very, very good authority that you can do that. Then there's the question of, well, hang on a minute, if I furlough myself, then what about when I'm carrying out the sort of statutory duties of my company? We have had it confirmed to us, again on very, very good authority, that that's fine. The only thing that you can't do is activities which generate income for your company. So when you're on furlough, you can't then be working within your company. This, of course, makes it quite different to the SEISS scheme, in which self-employed people can continue to trade, and they're just going to get that grant anyway. Someone even asked us on a question yesterday ahead of this webinar, well, could I watch a webinar like this? Well, would that include me working, for my business? Again, I think as long as you're not generating income by your activities, I think that counts as being furloughed. Now, we do need more guidance on this. And the other sort of big question on this is, what if I'm a limited company director who furloughs myself? Could I then go and seek an employment, perhaps go and get a job somewhere else as an employee? would I then still be eligible for the grant? I think that this one needs clarity, because Alistair was telling me earlier, weren't you, Alistair, that there is the HMRC were tweeting out earlier today that you can indeed do that.
Yeah.
But
yeah.
I was speaking to someone in the Treasury yesterday who was saying, could be a bit tricky, because if you imagine it from their point of view, they're thinking, well, if you were sort of operating as a company when times were good and getting income that way, then it all went bad, and then you got a job as an employee, and you've still got income coming in, then we don't really need to give you the money, and you're not really furloughed as an individual in the same way as that scheme was designed for. So, however, at the same time, you could imagine that government would be very reluctant to put out messages which would disincentivize those who are looking for work right now and getting income in that they can do safely, perhaps without leaving the house. So that they're going to have to strike a balance on that one, and I think we need to see some more guidance there. Did you want to add anything to that, Alistair?
No, I think so. It's it's a tricky thing where at the moment there's a lot of grey areas, and one of the one of the people attempting to fill some of these in is HMRC's customer service Twitter page, which is replying kind of in real time to some people's queries even before guidance is published. So perhaps take it with a bit of salt, but yeah, certainly what they were saying to a number of limited company directors this morning was you should be able to, once you've furloughed yourself, even though there will be challenges in doing that, you can take work on the side elsewhere in another capacity, whether it's a kind of PAYE part-time job, as long as that is then accounted for in your next tax submission. In terms of
I suppose they feel the same way about employees today, do you think? So if an employee is furloughed, but then they go and get some work doing something else for another employer, or perhaps in the gig economy as self-employed, they're still okay to keep claiming the 80%, are they?
Yeah, I think that
you can have
my understanding is that.
So why not?
Yeah. Anyway, it's a bit of a tricky area, isn't it? But we're hoping we'll get some more guidance on that. Any other questions?
I've got a couple here. One which I can answer very quickly is there a savings limit on universal credit? Yes, it's £16,000. So if you have over that amount in savings, then you will not be eligible for universal credit. If you have between £6,000 and £16,000, then you can claim, but that amount will be factored into how much you can get. And if you have under £6,000, then that will be counted towards it at all. You'll be kind of fully eligible, as it were. And then there was another question which perhaps either Andrew or Ryan could clarify. What support is there if half of, or more than half of my 2018-19 tax return wasn't from self-employed freelancing work, but in previous years, the balance was the other way, and more was coming in from self-employment?
I think with the way the scheme is calculated, if you put the 3 tax returns in and you've worked much more than 50% in the other 2 years, then that should count towards your average being above 50%. So you should, and you're a sole trader, obviously, you should qualify for the self-employment scheme, and the employment won't be counted. I think that's the way it works.
I think that this is an area that I would encourage people to keep checking our website and the government website for clarity on that one, because I've asked that question too. So I know that for the purposes of the 50k cap, they look at however many tax returns you have, either the full 3 going backwards from 18-19 tax year, or if you only have that one, they look at that one. But there is this rule that in order to qualify for the SEISS, you have to have more than 50% of your income coming from self-employment. And I'm not sure whether they base that just on the 18-19 or whether they look across the previous 3 and average them out. So I'm not totally clear about that one myself. And of course, there is the problem that you've got some people who in 18-19 perhaps were transitioning into self-employment. So they had an employment, but they were beginning to build up their self-employed business. They didn't, therefore, in that tax year, generate more than 50% of their total earnings from the self-employment. It was mostly from the employment. But then in 19-20, they perhaps quit the employment or started doing less employment and started doing more self-employment. they don't qualify either, even though they have a tax return which shows that they were self-employed because of the 50% rule. So this is where you've got these problems with the scheme, that there are people who are falling through the gaps because of how it happens to have worked out for them. And we are continuing to point these out to the government and say, is there something we can do for people like this?
There is a question here from Ian Bacon, who's asking about savings in UC. Now, Alistair might know a bit more than me, but Ian's asking, if I've got money saved in my business and I apply for UC, will that count? And as far as I'm aware, because you are employed by your business because of the limited company, the way it functions legally, and you haven't got any personal savings, that shouldn't affect your UC claim. Is that correct, Alistair? I think
so. This is one of the sections. The questions on universal credit is kind of the most detail heavy, I think. So this is the area of our website that we're kind of most kind of, you know, rapidly trying to put on. But yeah, that's my understanding. We're working to get a kind of full definition of what the kind of capital and savings criteria is. I know that there's some things can be ignored in terms of disregarded property and things like that. But yeah, I think that's broadly correct.
And then I've seen there's a couple of questions about, and I guess we'd be interested to see what people's feedback is like, because we're looking at lots of different ideas on how to help limited companies. And Andy mentioned briefly this idea of perhaps having some kind of discount on taxes or something. And the thinking behind that is that not everyone, but a lot of self-employed people will have some savings at the moment, which are specifically for paying your taxes at a later point. And we've heard from people already, members, non-members, and particularly people in the creative industries who are already dipping in to those savings put aside for taxes. And there is a concern more broadly that people, whilst waiting until June or for any other kind of government support, are already turning to overdrafts, credit cards, things like that, which is a much more broad concern. And I imagine a lot of employed people are doing that as well. So the thinking, although it's just gestating now, is an idea that you could get a discount from the government on the tax you'll pay in the future, meaning that the money you have put aside for it now, you can access more of it now. But it's very early days in what we're thinking at the moment.
Andy, I've seen.
Yeah, I mean, just
to
sort of add to that one. Just to sort of add to that one. Look, I think that, you know, we would all like to see a tax break in any time, wouldn't we? We all want to see that sort of lower taxation for businesses. So it would be valuable in that sense. The idea of it happening now is, as Ryan says, that you might be able to access whatever money you've put aside to pay those taxes. It would be a sort of, that would be the gift in a way. The gift would just be that you won't have to use those savings later on, so you can use them now. The trouble, of course, is that some people might legitimately say, look, I've sort of had a bit of a difficult year. I hadn't put aside tax, but I knew that I had until January, operating in normal times, to save up that tax and get ready to pay that tax bill. Indeed, let's face it, lots of people will actually do that anyway. They'll just think, well, I'm going to, you know, I know I've got to pay some tax in Jan, so I'll start, well, that's my deadline really. I'm not necessarily thinking as I'm earning that money that I'm going to put aside the tax for it. So it would be imperfect in that way, but it would be better than nothing, or close-ish to nothing, which is what currently a lot of limited company directors have. So that's one thought that we're working on. I'm going to publish an article on this hopefully later today as well. So if you go to our website, you should be able to find that, and it should be included in the next newsletter too. So if you sign up for our newsletter, you'll see that, where I sort of think through some of these ideas a bit more.
Andy, there's a few kind of disparate questions which are asking about agency work, umbrellas, and kind of short-term PAYE contracts. I wonder if you could possibly clarify some of the, I know that's an area that's kind of, that's very much a fast-moving one that's not set in stone at the moment, but if you could just clarify sort of for people what they really are for those situations.
So there is confusion about how those who are working currently inside umbrella companies, these are sort of payroll companies, could be reimbursed via whichever one of the schemes. Are they eligible for any of those schemes? Now, there is a group called the Freelancer Contractor Services Association, and we're fairly good friends with them, and they are a sort of overseeing body that tries to be a sort of self-regulating body for umbrella companies, which famously aren't particularly well regulated. And they are calling for greater clarity from the government to ensure that anyone who is working via an umbrella, who in any normal, properly compliant umbrella or structure, will be paying employment taxes. Basically, they'll be paying the full PAYE through that umbrella, right? The umbrella will be deducting those taxes and handing them over to the government. Now, in our minds, in their minds, those people should be eligible for the job retention scheme and the full 80%. And the umbrella company could effectively furlough those workers and give them the 80%. But there is some confusion around it and suggestions that they should only actually get the national minimum wage because of various ways that some of these umbrella companies structure things. So we are pushing for that to be the case, because that's a pretty clear one in terms of how it should work, if you ask me. You know, someone's working by an umbrella company, they are, for all intents and purposes, employed by the umbrella company. That's how it works, though it's a bit weird, right? But that's sort of how it works. And they are paying full employment taxes on their income that's provided to them by the umbrella company. We think that the umbrella company should be able to furlough them on the full 80%, and there is pressure on the government to make that clear. I mean, it also slightly touches on the issue of IR35 again. I'm always banging on about IR35. Everything comes back to IR35 for me. But what about people who were told that they were working inside IR35 and then shoved into an umbrella? Right, which happened before this delay was announced that I mentioned at the start of this presentation. So they were given a sort of status determination statement, which, by the way, now is a meaningless bit of paper, but nevertheless, they were told by their client IR35 applies, go and work via this umbrella. Now, they've been sort of doubly kind of impacted by this, because first of all, they may well have not been caught by IR35 because their client might have got that decision wrong, or did a blanket decision which put them inside, and so they're already feeling pretty hard done by for that. And now that they're paying tax like an employee, they're not even potentially going to get the full benefit of the furlough scheme. I think this is just, I mean, that really feels unjust, and I think the government should look at that area. I mean, the problem is, at the moment, the government have got to look at every single area of our economy and come up with something to help them. And this is a relatively small group in the grand scheme of things, but it is a group who have been pretty harshly treated by the government policy in recent times. And I think that the government should certainly make it clear that they should be at least entitled to the job retention scheme, 80% furlough, up to the £2,500 a month cap. That's my answer on that one. A bit long and rambly, sorry. We've got a couple of minutes left. Is there any other sort of like commonly asked questions coming through?
There's a few that are floating around, just for clarity on the VAT situation. So, as I said, if you're a UK VAT registered business and have a payment due between 20th of March and 13th of June, so you have the option to either just pay that VAT due as normal or defer the payment until a later date. And HMRC is saying it won't charge interest or penalties on any amount deferred. And then, kind of just following on from that, you'll still need to submit your VAT returns to HMRC on time. But if you choose to defer paying your VAT payment as a result of coronavirus, then you must pay that on or before 31st of March 2021. So that's the kind of next deadline. And one kind of useful thing about this is it's automatic, so you don't need to tell HMRC that you are deferring your VAT payment. As I say, for other people who are asking questions on deferring other things like corporation tax, use that helpline that I mentioned earlier for kind of help, advice, and agreeing a kind of staggered deferred, payment arrangement for that. But for the VAT one, it's quite explicit on the government website that you don't need to tell them that you are deferring your VAT payment.
Yeah, one of the interesting things about the VAT deferral thing is that I think it's a little bit of a test for the Making Tax Digital system, which has only been in place for a year, which has been in place for VAT only. And everyone's got this new software now where it sort of automatically updates and you can send a report to HMRC. It will be interesting to see how, if that all goes smoothly with all the different software that's out there, because I imagine that they're thinking, hang on a minute, how's this going to impact our software, and can they update it in time and things like that. So certainly that will be an interesting thing to see if that goes smoothly or not.
Yeah, I know we've had at least one question in on somebody who's making tax digital and has a different due date for that. So I will endeavour to get back to that person individually and try and help them out a bit. But yeah, it's a mixed picture.
Okay, so we've reached the end of the hour now. I think that's probably where we should sort of close this webinar. As I say, we're going to do more of these, so you can come back, and if you think you know people that would be interested in them, do tell people. We've had fantastic amounts of attendance. We had good numbers last week. We've had even better numbers this week. We've had over 700 registering, and well over 500 of those actually attended, which is a really good sort of attendance ratio, believe it or not, for these things. So we hope that you found it useful, and we will try and get back to you on your questions. Keep checking our FAQ page, as you can see the link in front of you there, because if we do get frequently asked questions via these webinars or anywhere else, we input them into that as well. And you can sign up for our newsletter at the top link for more information. So that's it. Just want to say thank you so much for listening. And also, I know that times out there are really hard for business right now, and I know that a lot of people on this webinar are coming here because they are very worried about what's going on. We are hearing your concerns and we are relaying them to government. I can't guarantee that you're going to get a package of support which is going to be sufficient for you, but I can guarantee you that we're doing all we can to let the government know that you're out there and that you need their help. So thanks for listening. Cheers.
This webinar will also be downloadable, won't it, and available on the
website?
Indeed,
yes, you can see there will be a video of this webinar up later today, I should think. Okay, thanks.
Thanks, everyone.
Thanks, guys.
Cheers, bye.
Bye.